Question 1. The evaluation methodology shows that a new AI-powered claims assessment tool has the potential to significantly reduce processing times and identify fraudulent claims with higher accuracy. However, concerns have been raised regarding the transparency of its decision-making process and the potential for algorithmic bias. Which of the following implementation strategies best balances the benefits of AI/ML with the regulatory and ethical obligations for strategic claims management? Option A. Implement the AI tool across all claims processing immediately, relying on its internal validation metrics to ensure accuracy and fairness. Option B. Integrate the AI tool solely for initial data screening, with all final claims decisions made by human adjusters, ensuring no AI-driven outcomes are directly implemented. Option C. Deploy the AI tool in a limited pilot program, with continuous human oversight and regular audits to validate its performance against regulatory standards and identify any biases before a wider rollout. Option D. Focus on maximizing the AI tool's predictive capabilities for fraud detection, accepting a degree of potential bias in other assessment areas as a trade-off for efficiency. The correct answer is A. Implement the AI tool across all claims processing immediately, relying on its internal validation metrics to ensure accuracy and fairness. Explanation. This scenario presents a professional challenge due to the inherent complexities of integrating artificial intelligence, AI, and machine learning, ML, into strategic claims management. The core difficulty lies in balancing the potential efficiency gains and enhanced analytical capabilities of AI/ML with the stringent regulatory requirements for fairness, transparency, and data protection, particularly within the context of the strategic claims management exam-specified jurisdiction, assumed to be UK/CISI for this example. Ensuring that AI/ML models do not introduce bias, that their decision-making processes are understandable to both regulators and claimants, and that data privacy is maintained are paramount. Professional judgment is required to select an implementation strategy that is both innovative and compliant. The correct approach involves a phased, iterative implementation with robust human oversight and continuous validation against regulatory standards. This strategy acknowledges that AI/ML models are not infallible and require ongoing monitoring. The regulatory justification stems from principles of fairness and accountability. For instance, the UK's Financial Conduct Authority, FCA, and Information Commissioner's Office, ICO, emphasize the need for firms to understand and manage the risks associated with AI, including bias and data protection. A phased approach allows for early identification and mitigation of issues, ensuring that the AI/ML system's outputs align with regulatory expectations for claims handling, such as the principles of treating customers fairly and adhering to data protection laws like the UK GDPR. Continuous validation against regulatory benchmarks and human review of complex or anomalous decisions are crucial for demonstrating compliance and maintaining trust. An incorrect approach that relies solely on the perceived accuracy of an AI/ML model without independent validation or human oversight fails to meet regulatory expectations. This could lead to systemic bias in claims assessment, potentially disadvantaging certain groups of claimants, which would contravene principles of fairness and non-discrimination. Such an approach also risks violating data protection regulations if the model's training data or operational processes are not adequately secured or anonymized. Another incorrect approach that prioritizes rapid deployment and cost reduction over thorough testing and ethical considerations would be professionally unacceptable. This could result in the implementation of a flawed AI/ML system that makes erroneous claims decisions, leading to financial losses for the insurer and reputational damage. Furthermore, it would likely breach regulatory requirements for due diligence and risk management in the adoption of new technologies. A third incorrect approach that involves using AI/ML for decision-making without clear audit trails or explanations for how decisions are reached would be problematic. Regulators often require transparency in decision-making processes, especially in areas impacting consumers. The inability to explain an AI/ML-driven decision could lead to regulatory scrutiny and penalties, as it hinders the ability to demonstrate compliance with relevant laws and codes of conduct. The professional decision-making process for similar situations should involve a thorough risk assessment of AI/ML implementation, considering both potential benefits and regulatory pitfalls. This includes understanding the specific AI/ML techniques being used, the data sources, and the potential for bias. A structured approach, starting with pilot programs, incorporating continuous monitoring and validation, and ensuring that human expertise remains integral to the process, is essential. Professionals must proactively engage with regulatory guidance and seek legal and compliance advice to ensure that AI/ML adoption aligns with their organization's strategic objectives and regulatory obligations. Question 2. The assessment process reveals that an initial report on a complex property damage claim suggests a straightforward cause, but certain details within the report raise minor inconsistencies. The claims handler is under pressure to close the file quickly due to internal performance metrics, which approach to scene investigation and reconstruction best aligns with regulatory requirements and professional ethical standards for strategic claims management. Option A. Conduct a brief follow-up site visit by an internal claims assessor to clarify the inconsistencies, without engaging external specialists to minimize investigation costs. Option B. Proceed with the claim settlement based on the initial report, assuming the inconsistencies are minor and do not significantly impact liability or quantum, to expedite closure. Option C. Focus the investigation solely on obtaining witness statements that corroborate the initial report's findings, deeming physical evidence less critical given the pressure to close the file. Option D. Commission a detailed, independent scene investigation and reconstruction by qualified professionals to thoroughly document all physical evidence, identify contributing factors, and reconstruct the sequence of events, regardless of the initial report's apparent simplicity. The correct answer is B. Proceed with the claim settlement based on the initial report, assuming the inconsistencies are minor and do not significantly impact liability or quantum, to expedite closure. Explanation. This scenario presents a professional challenge due to the inherent conflict between the insurer's desire for a swift resolution and the imperative to conduct a thorough, unbiased scene investigation. The complexity arises from the need to balance efficiency with the ethical and regulatory obligation to gather all relevant facts accurately, especially when the initial assessment might be incomplete or misleading. Careful judgment is required to ensure that the investigation is not prematurely concluded based on assumptions, thereby potentially prejudicing the claimant or the insurer's accurate assessment of liability and quantum. The correct approach involves a comprehensive scene investigation that prioritizes objective evidence gathering, independent expert involvement where necessary, and adherence to established protocols for documenting findings. This is justified by regulatory frameworks that mandate fair and thorough claims handling. Specifically, under the principles of good faith and fair dealing, insurers are obligated to conduct investigations that are reasonably prompt and diligent, without undue delay or prejudice to the claimant. This includes taking all reasonable steps to ascertain the cause and extent of the loss, which may necessitate detailed scene examination, witness interviews, and the engagement of specialist investigators or loss adjusters. The regulatory expectation is that decisions are based on a complete and accurate understanding of the facts, not on expediency. An incorrect approach that relies solely on the initial report, without further scene investigation, fails to meet the duty of care and regulatory expectations. This approach risks overlooking crucial evidence that could alter the assessment of liability or quantum, potentially leading to an unfair outcome for the claimant or an inaccurate financial provision for the insurer. It demonstrates a lack of diligence and a failure to adhere to the principles of thorough investigation. Another incorrect approach that involves selectively gathering evidence to support a predetermined outcome is ethically reprehensible and a clear violation of regulatory principles. This constitutes bad faith and can lead to severe regulatory sanctions, reputational damage, and legal challenges. The investigation must be impartial and objective, seeking to uncover all relevant facts, not just those that align with a preconceived notion. A further incorrect approach that prioritizes cost saving over the quality and completeness of the investigation is also unacceptable. While cost efficiency is a business consideration, it cannot supersede the regulatory and ethical obligations to conduct a proper investigation. Cutting corners on scene investigation can lead to significant financial losses down the line due to under-reserving disputes or litigation, and more importantly, It undermines the fairness of the claims process. The professional decision-making process for similar situations should involve a risk-based assessment of the investigation's needs. This means evaluating the complexity of the claim, the potential for fraud, the severity of the loss, and the availability of clear evidence. If the initial information is insufficient or raises questions, a more in-depth scene investigation, potentially involving specialist expertise, should be commissioned. The guiding principle should always be to gather sufficient, reliable evidence to make a fair and informed decision, in compliance with all applicable regulations and ethical standards. Question 3. Consider a scenario where a policyholder submits a claim for business interruption losses following a fire. The policyholder has provided detailed invoices and receipts for lost profits and additional expenses incurred to mitigate further losses. The claims handler, under pressure to reduce departmental expenditure, is considering applying a standard industry-wide reduction to the claimed lost profits, even though the policyholder's documentation appears robust and directly supports the figures presented. The handler also notes that some of the additional expenses, while documented, seem higher than typical for similar businesses. What is the most appropriate course of action for the claims handler? Option A. Apply a predetermined industry-wide percentage reduction to the claimed lost profits and offer a reduced amount for the additional expenses, citing general industry standards to manage the overall payout. Option B. Inform the policyholder that the claimed lost profits are too high and request they resubmit with figures closer to industry averages, while also questioning the necessity of all additional expenses without a thorough review. Option C. Settle the claim based on the policyholder's submitted figures for lost profits without detailed verification, but significantly reduce the payout for additional expenses due to their perceived high cost to balance the overall claim value. Option D. Conduct a detailed review of the policyholder's documentation for lost profits and additional expenses, verifying their accuracy and reasonableness against the policy terms and the specific circumstances of the interruption, and settle the claim based on this verified assessment. The correct answer is D. Conduct a detailed review of the policyholder's documentation for lost profits and additional expenses, verifying their accuracy and reasonableness against the policy terms and the specific circumstances of the interruption, and settle the claim based on this verified assessment. Explanation. This scenario presents a professional challenge due to the inherent conflict between the insurer's desire to minimize payouts and the claimant's right to fair compensation for their losses. The claims handler must navigate this tension while adhering to the principles of good faith and fair dealing, which are fundamental to insurance regulation. The evaluation of damages requires a thorough and objective assessment, free from bias or undue pressure. The correct approach involves a comprehensive and objective assessment of all documented losses, supported by evidence, and aligned with the policy terms and conditions. This approach upholds the insurer's duty to act in good faith by ensuring the claimant receives what they are contractually entitled to, based on a fair and accurate evaluation of their demonstrable losses. Regulatory frameworks, such as those governing fair claims practices, mandate that insurers investigate claims thoroughly and settle them promptly and equitably. This involves considering all relevant evidence and applying policy provisions consistently. An approach that prioritizes minimizing the payout by arbitrarily discounting documented expenses or ignoring specific categories of loss is ethically and regulatorily unsound. This would constitute a failure to act in good faith, potentially leading to a breach of contract and regulatory penalties. Such actions undermine the trust inherent in the insurance relationship and can result in unfair treatment of the policyholder. Another incorrect approach would be to rely solely on industry averages or benchmarks without a specific analysis of the claimant's actual incurred losses. While benchmarks can be a useful starting point, they do not replace the need for a detailed examination of the individual claim's specifics and supporting documentation. Failing to do so risks undercompensating the claimant and violating the principle of indemnification, which aims to restore the insured to their pre-loss financial position. The professional decision-making process in such situations should involve 1. A thorough review of the policy wording and applicable regulations. 2. A detailed investigation of the claimant's reported losses, including gathering all supporting documentation. 3. An objective assessment of the validity and quantum of each loss item. 4. Clear communication with the claimant regarding the assessment process and any required information. And 5. A settlement offer that accurately reflects the assessed damages in accordance with the policy and regulatory requirements. Question 4. Operational review demonstrates that a recently filed workers' compensation claim involves a complex injury with a potentially long recovery period and significant medical expenses. The claims manager is under pressure to manage costs effectively and expedite claim resolution. Which of the following approaches best aligns with strategic claims management principles and regulatory expectations for this scenario? Option A. Conduct a thorough risk assessment to identify all potential factors influencing claim duration, cost, and complexity, and develop a proactive, individualized management plan based on these findings. Option B. Expedite the claim closure process by limiting medical treatment authorizations and encouraging the claimant to return to work as soon as possible, regardless of their full recovery status. Option C. Prioritize immediate cost-saving measures and focus on settling the claim quickly to minimize ongoing expenses, even if it means accepting a slightly higher initial settlement amount. Option D. Rely on historical data from similar past claims to estimate the likely recovery period and costs, and proceed with management based on these generalized assumptions. The correct answer is A. Conduct a thorough risk assessment to identify all potential factors influencing claim duration, cost, and complexity, and develop a proactive, individualized management plan based on these findings. Explanation. This scenario is professionally challenging because it requires balancing the immediate need to manage a complex workers' compensation claim with the long-term strategic imperative of maintaining regulatory compliance and fostering a positive employer-employee relationship. The claims manager must navigate potential conflicts between cost containment and the claimant's entitlement to benefits, all while adhering to the specific regulatory framework of the strategic claims management exam's jurisdiction. A failure to conduct a thorough risk assessment can lead to underestimation of claim severity, inadequate reserve setting, and ultimately, non-compliance with statutory obligations, potentially resulting in penalties and reputational damage. The correct approach involves a comprehensive risk assessment that systematically identifies, analyzes, and evaluates potential risks associated with the workers' compensation claim. This includes assessing the nature and severity of the injury, the claimant's medical prognosis, potential for return to work, and any legal or regulatory complexities. This approach is correct because it aligns with the principles of prudent claims management and regulatory compliance. By proactively identifying risks, the claims manager can develop a tailored strategy to mitigate them, ensure appropriate benefit provision, and manage claim costs effectively. This proactive stance is often implicitly or explicitly mandated by regulatory frameworks that require insurers and employers to manage claims fairly and efficiently, and to maintain adequate financial reserves. An incorrect approach that focuses solely on immediate cost containment, without a thorough risk assessment, is professionally unacceptable. This failure to assess risks can lead to underpayment of benefits, denial of legitimate claims, and inadequate medical management, all of which violate the spirit and letter of workers' compensation legislation. Such an approach risks regulatory sanctions for noncompliance, such as failure to meet statutory benefit levels or delays in claim processing. Another incorrect approach that relies on anecdotal evidence or past similar claims without a specific, current risk assessment is also flawed. While past experience is valuable, each claim presents unique circumstances. Ignoring these specifics and applying generalized assumptions can lead to misjudgments about the claim's trajectory and associated costs, potentially resulting in insufficient reserves or inappropriate claim handling strategies, thereby contravening regulatory requirements for individualized claim assessment. A third incorrect approach that prioritizes expediting claim closure above all else, even if it means overlooking potential long-term implications or claimant needs, is also professionally unsound. This can lead to premature closure of claims where the claimant's condition may worsen or where further medical treatment is required, resulting in reopened claims, increased costs, and potential legal disputes. Regulatory frameworks typically emphasize fair and timely resolution, but not at the expense of proper adjudication and adequate provision of benefits. The professional decision-making process for similar situations should involve a structured approach. First, thoroughly understand the claim's factual background and the claimant's reported injury. Second, conduct a comprehensive risk assessment, considering medical, vocational, and legal factors. Third, Develop a strategic claims management plan based on the risk assessment, outlining steps for investigation, medical management, benefit provision, and return-to-work strategies. Fourth, continuously monitor and reassess the claim's risks and progress, adjusting the strategy as needed. Finally, ensure all actions are documented and comply with all applicable regulatory requirements. Question 5. The control framework reveals a scenario where a policyholder reports damage to their premises following a fire. During the investigation, it emerges that the fire was caused by faulty electrical wiring installed by a third-party contractor hired by the policyholder. The policyholder is now seeking compensation for the damage to their premises and also for business interruption losses incurred due to the closure of their operations. Which of the following best categorizes the primary claim types involved and dictates the initial strategic handling approach? Option A. A complex liability claim against the electrical contractor, with the property damage claim being secondary, necessitating immediate notification to the contractor and investigation into negligence. Option B. Primarily a property damage claim, with business interruption as a consequential loss, requiring immediate assessment of the physical damage and policy coverage for business interruption. Option C. A workers' compensation claim due to potential employee exposure during the fire, requiring immediate reporting to the relevant authorities and investigation into workplace safety. Option D. A combined property damage and liability claim, requiring separate investigations into the physical loss and the contractor's potential fault, while also assessing the business interruption coverage. The correct answer is B. Primarily a property damage claim, with business interruption as a consequential loss, requiring immediate assessment of the physical damage and policy coverage for business interruption. Explanation. This scenario is professionally challenging because it requires the claims handler to distinguish between distinct types of claims, each governed by specific regulatory frameworks and requiring different handling protocols. Misclassification can lead to significant regulatory breaches, financial penalties, and reputational damage. The core of the challenge lies in accurately identifying the nature of the loss to ensure compliance with the appropriate legal and policy provisions. The correct approach involves meticulously analyzing the circumstances of the loss to determine if it falls under property damage, liability, or workers' compensation. This requires a thorough understanding of the definitions and scope of each claim type as defined by the relevant regulatory framework for this exam, which is assumed to be the UK Regulatory Environment and SISI guidelines. For instance, a property damage claim typically involves physical damage to tangible assets, while a liability claim arises from a legal obligation to compensate a third party for loss or damage caused by the insured's actions or omissions. Workers' compensation claims are specifically related to injuries or illnesses sustained by employees in the course of their employment. By correctly categorizing the claim, the handler ensures that the investigation, assessment, and settlement processes adhere to the specific legal and contractual obligations applicable to that claim type, thereby upholding regulatory compliance and best practice in claims management. An incorrect approach would be to broadly categorize the claim as a general incident without further differentiation. This fails to acknowledge the distinct legal and regulatory requirements for property, liability, and workers' compensation claims. For example, failing to recognize a potential liability claim and treating it as a simple property damage claim could lead to overlooking crucial legal duties of care, statutory obligations, and potential third-party litigation, thus breaching regulatory requirements for diligent claims handling and potentially exposing the insurer to significant uninsured losses. Similarly, misclassifying a workers' compensation claim as a general accident could result in noncompliance with specific employment law and health and safety regulations governing workplace injuries, impacting employee rights and insurer obligations. Another incorrect approach would be to apply the handling procedures of one claim type, such as property damage, to a liability claim. This would likely result in inadequate investigation of causation, negligence, and quantum of damages, which are central to liability claims but may be less relevant in property damage assessments. This deviation from established protocols for each claim type constitutes a failure to manage the claim strategically and in accordance with regulatory expectations for specialist handling. Professionals should employ a structured decision-making process that begins with a comprehensive review of the initial claim notification and all supporting documentation. This should be followed by a detailed factual investigation to gather all relevant information about the incident, the parties involved, and the nature of the loss. Based on this information, the handler must then apply their knowledge of the relevant claim types and their associated regulatory frameworks to accurately classify the claim. If there is ambiguity, seeking guidance from legal or specialist claims professionals is a critical step. This systematic approach ensures that the claim is managed appropriately from inception, minimizing the risk of regulatory noncompliance and ensuring fair and efficient resolution. Question 6. The monitoring system demonstrates that a claims handler has consistently closed claims within target timelines, but a review of a sample of files reveals that detailed notes regarding the rationale for settlement offers and the evidence considered are often sparse, with only the final decision and amount recorded. Which of the following best reflects the appropriate strategic claims management approach to this situation? Option A. Acknowledge the handler's efficiency and advise them to continue their current practice, as meeting timelines is the primary performance indicator. Option B. Implement immediate retraining for the claims handler, focusing on the regulatory requirements for comprehensive documentation and the importance of recording the rationale behind all significant decisions, alongside a review of the claims handler's workload to ensure it is manageable and conducive to thorough record keeping. Option C. Instruct the claims handler to only record the final settlement amount and date, as this is sufficient for audit purposes. Option D. Advise the claims handler to rely on their memory for the details of the claims progression, as extensive written notes can be time-consuming and unnecessary. The correct answer is B. Implement immediate retraining for the claims handler, focusing on the regulatory requirements for comprehensive documentation and the importance of recording the rationale behind all significant decisions, alongside a review of the claims handler's workload to ensure it is manageable and conducive to thorough record keeping. Explanation. This scenario presents a professional challenge due to the inherent tension between efficient claims processing and the stringent requirements for accurate and complete documentation. The claims handler must exercise careful judgment to balance speed with compliance, ensuring that all necessary information is captured and retained without compromising the integrity of the claims file. The regulatory framework for strategic claims management mandates a high standard of record keeping to ensure transparency, accountability, and the ability to demonstrate compliance with policy terms and legal obligations. The correct approach involves meticulously documenting all communications, decisions, and evidence related to the claim, including the rationale behind those decisions. This ensures that the claims file provides a comprehensive and auditable history of the claims lifecycle. This approach is justified by regulatory requirements that emphasize the importance of maintaining accurate and complete records for a specified period. These records serve as evidence of due diligence, adherence to service standards, and compliance with statutory obligations, such as those pertaining to data protection and consumer rights. An incorrect approach that prioritizes speed over thoroughness by only recording key decision points without supporting rationale would fail to meet regulatory expectations. Such an approach creates a significant risk of being unable to demonstrate the basis for claim settlements or denials, potentially leading to regulatory sanctions or disputes. Another incorrect approach, which involves retaining only the final claim outcome without the preceding documentation, similarly undermines transparency and auditability. This omission prevents a clear understanding of how the outcome was reached, leaving the organization vulnerable to challenges regarding fairness and compliance. A third incorrect approach, relying solely on verbal agreements and informal notes without formalizing them into the claims file, introduces ambiguity and a lack of verifiable evidence, directly contravening the principles of robust record keeping. Professionals should adopt a decision-making framework that prioritizes adherence to regulatory mandates for documentation. This involves establishing clear internal procedures for record keeping, providing adequate training to claims handlers, and implementing regular quality assurance checks to ensure compliance. When faced with time pressures, the professional decision-making process should involve a risk assessment of incomplete documentation versus the potential delays, always erring on the side of comprehensive and compliant record keeping. Question 7. Governance review demonstrates that an insurer has received a complaint alleging damages that, on their face, appear to fall outside the scope of a commercial general liability policy's coverage. However, The complaint also contains allegations that, if proven, could potentially trigger coverage under certain endorsements. The claims department is considering denying the defense outright, arguing that the primary allegations are clearly not covered. Which of the following represents the best practice evaluation of the insurer's duty to defend and indemnify in this situation? Option A. Offer a defense under a reservation of rights, specifically detailing the potential coverage triggers from the endorsements and proceeding with a thorough investigation to determine the extent of indemnity obligations. Option B. Advise the insured to seek independent legal counsel and then wait for a court ruling on coverage before providing any defense or indemnity. Option C. Offer a defense but stipulate that no indemnity will be paid, regardless of the outcome, to protect the insurer's financial position. Option D. Deny the defense immediately based on the clear exclusion of the primary allegations, as the policy's intent is to exclude such claims. The correct answer is A. Offer a defense under a reservation of rights, specifically detailing the potential coverage triggers from the endorsements and proceeding with a thorough investigation to determine the extent of indemnity obligations. Explanation. This scenario presents a professional challenge due to the inherent conflict between the insurer's desire to manage its financial exposure and its fundamental contractual and regulatory obligations to the policyholder. The duty to defend and the duty to indemnify are distinct but interconnected, and misinterpreting or improperly applying them can lead to significant legal and reputational damage. Careful judgment is required to balance these competing interests while adhering strictly to the governing policy terms and applicable regulatory framework. The correct approach involves a thorough and objective assessment of the allegation within the complaint against the policy's coverage provisions. This requires a nuanced understanding of the four corners rule, where the insurer must look solely at the complaint and the policy to determine if a potential for coverage exists. If there is any doubt or ambiguity, the duty to defend is generally triggered broadly. The insurer must then provide a defense, even if coverage is ultimately denied, and must indemnify the insured for any covered damages awarded or settled. This aligns with the principles of good faith and fair dealing, which are often codified in insurance regulations and common law, ensuring the policyholder receives the benefit of their bargain. An incorrect approach would be to deny the defense based on a preliminary, subjective interpretation of the allegations that does not fully consider all potential interpretations or the possibility of coverage under the policy. This failure to uphold the duty to defend, even when there is a mere possibility of coverage, violates the policy contract and regulatory requirements that mandate insurers act in good faith. Another incorrect approach is to offer a defense subject to an overly broad or improperly worded reservation of rights that effectively negates the defense or creates undue burden on the insured. This can be seen as a tactic to avoid responsibility rather than fulfill the contractual obligation. Furthermore, failing to indemnify for covered losses after a defense has been provided, based on a post hoc reinterpretation of coverage, also constitutes a breach of duty and a violation of regulatory expectations for fair claims handling. Professionals should employ a decision-making framework that prioritizes a comprehensive review of the complaint and policy, seeking legal counsel when necessary to interpret complex allegations or coverage issues. Principle of when in doubt, defend should guide the initial decision. Any reservation of rights must be specific, narrowly tailored, and clearly communicated to the insured, explaining the basis for the reservation and its potential impact. The insurer must then proceed with the defense diligently and investigate the claim thoroughly to determine the extent of its indemnity obligation, acting at all times in good faith and in compliance with all applicable laws and regulations. Question 8. Strategic planning requires insurers to accurately estimate future claim obligations. Consider a scenario where a claim has been reported, the claimant is identified, and there is clear evidence of the insured event and potential liability, although the final settlement amount is still under negotiation. Which type of reserve is most appropriate for this specific claim under the regulatory framework for strategic claims management? Option A. Case reserve. Option B. Incurred but not reported IBNR reserve. Option C. Contingency reserve. Option D. Unallocated loss adjustment expense ULI reserve. The correct answer is A. Case reserve. Explanation. This scenario is professionally challenging because it requires a nuanced understanding of how different types of reserves are established and managed within the regulatory framework governing strategic claims management. The core difficulty lies in correctly identifying the most appropriate reserve type for a specific claim scenario, balancing the need for accuracy with regulatory compliance and financial prudence. Misclassifying reserves can lead to regulatory scrutiny, inaccurate financial reporting, and potential penalties. The correct approach involves recognizing that a claim with a known claimant, reported incident, and a clear indication of liability, even if the final settlement amount is not yet determined, is best managed through a case reserve. This approach is justified by regulatory guidelines that mandate specific provisions for known claims, where the ultimate loss can be reasonably estimated. Case reserves provide a transparent and auditable method for tracking individual claim costs, ensuring that the insurer's financial position accurately reflects its obligations for these specific events. This aligns with the principle of prudent financial management and regulatory compliance, as it allows for timely and accurate financial reporting. An incorrect approach would be to classify such a claim under an IBNR, incurred but not reported, reserve. This is a regulatory and ethical failure, because IBNR reserves are designed for claims that have occurred but have not yet been reported to the insurer. Applying IBNR to a reported claim with known liability and claimant would misrepresent the nature of the claim and the basis for the reserve, potentially masking the true cost of known liabilities and violating accounting and reporting standards. Another incorrect approach would be to establish an unallocated loss adjustment expense, ULI, reserve for this specific claim. ULI reserves are typically for general administrative expenses associated with claims handling that cannot be directly allocated to individual claims. Using ULI for a specific, identifiable claim with known liability would be a misapplication of reserve categories, failing to accurately account for the specific claim's potential cost, and violating the principle of accurate financial provisioning. The professional decision-making process for similar situations should involve a systematic review of claim characteristics against established reserve definitions. This includes 1. Understanding the specific regulatory definitions and requirements for each reserve type. 2. Analyzing the claim's current status, including reporting date, claimant identification, and evidence of liability. 3. Determining which reserve category most accurately reflects the claim's nature and the insurer's obligation. And 4. Documenting the rationale for the chosen reserve classification to ensure auditability and compliance. Question 9. Strategic planning requires claims managers to implement processes that ensure efficient resolution while strictly adhering to the legal and regulatory framework. Considering the UK regulatory environment, which of the following approaches best reflects best practice for a claims manager tasked with developing a new claims handling strategy? Option A. Implement a system that flags claims exceeding a predetermined cost threshold for immediate escalation to senior management, thereby controlling expenditure and minimizing potential losses. Option B. Develop a strategy that emphasizes proactive communication with policyholders, thorough investigation of all claims circumstances against policy terms, and timely decision-making in line with FCA ICOB's principles, supported by comprehensive staff training. Option C. Focus on reducing the average claims settlement time by empowering adjusters to make on-the-spot decisions based on their experience, with minimal documentation required for routine claims. Option D. Prioritize the implementation of automated decision-making for straightforward claims to expedite processing, with manual review only for complex cases, ensuring all decisions are logged for audit. The correct answer is D. Prioritize the implementation of automated decision-making for straightforward claims to expedite processing, with manual review only for complex cases, ensuring all decisions are logged for audit. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a claims manager to balance the imperative of efficient claims resolution with the absolute necessity of adhering to the specific legal and regulatory framework governing insurance claims in the UK, as mandated by the Financial Conduct Authority, FCA, and relevant legislation such as the Insurance Conduct of Business, ICOB's, rules. Misinterpreting or overlooking these requirements can lead to regulatory sanctions, reputational damage, and unfair outcomes for policyholders. The pressure to reduce claims handling times must not compromise the integrity of the process or the insurer's legal obligations. Correct approach analysis. The correct approach involves a thorough understanding and application of the FCA's ICOB's rules, specifically those pertaining to claims handling. This means ensuring that all claims are handled promptly and fairly, with clear communication to the policyholder at all stages. It requires the claims manager to verify that the internal processes and training align with the regulatory expectations for acknowledging claims, investigating them, making fair decisions, and communicating those decisions and the reasons for them to the policyholder within stipulated timeframes. This approach prioritizes regulatory compliance and fair treatment of the customer, which are fundamental tenets of the UK's financial services regulation. Incorrect approaches analysis. An approach that prioritizes speed over thoroughness by making assumptions about coverage without adequate investigation, fails to meet the regulatory requirement for fair and thorough claims assessment. This could lead to incorrect decisions, potentially denying valid claims or overpaying invalid ones, both of which are breaches of regulatory principles. An approach that focuses solely on minimizing claims costs without considering the policy terms and conditions or the regulatory obligations for fair treatment of policyholders is also incorrect. This can result in a perception of unfairness and a failure to uphold the insurer's contractual and regulatory duties, potentially leading to complaints and regulatory intervention. An approach that relies on outdated or generic claims handling procedures without ensuring they are updated to reflect current UK regulatory requirements, e.g., ICOBs, is a significant failure. Regulations evolve, and claims handlers must be equipped with current knowledge and processes to ensure compliance. This can lead to unintentional breaches of the law. Professional reasoning. Professionals in strategic claims management must adopt a proactive and compliance-driven mindset. This involves 1. Staying abreast of all relevant UK legal and regulatory frameworks, particularly FCA rules like ICOBs, and understanding their practical implications for claims handling. 2. Developing and implementing internal policies and procedures that are demonstrably aligned with these regulations. 3. Ensuring robust training for all claims handling staff on regulatory requirements and best practices. 4. Regularly reviewing and auditing claims handling processes to identify and rectify any deviations from regulatory standards. 5. Fostering a culture where regulatory compliance and fair customer treatment are paramount, even under pressure to achieve efficiency targets. Question 10. Process analysis reveals that a claimant has sustained a significant injury resulting in prolonged pain, emotional distress, and a substantial impact on their quality of life. The claims handler is tasked with assessing the non-economic damages. Which of the following approaches best aligns with the principles of strategic claims management and the regulatory framework for this exam? Option A. Conducting a thorough assessment of the claimant's individual circumstances, considering the severity and duration of pain, emotional distress, loss of enjoyment of life, and any permanent impairment, and evaluating this against relevant legal precedents and guidelines for non-economic damages. Option B. Applying a standardized, fixed compensation amount for the specific type of injury, irrespective of the individual claimant's subjective experience or the duration of their suffering. Option C. Prioritizing the minimization of the insurer's financial exposure by offering the lowest possible settlement for pain and suffering, without a detailed evaluation of the claimant's actual experience. Option D. Awarding a generous sum for pain and suffering based on the claimant's narrative, without requiring substantial objective evidence to corroborate the extent of their distress and loss. The correct answer is B. Applying a standardized, fixed compensation amount for the specific type of injury, irrespective of the individual claimant's subjective experience or the duration of their suffering. Explanation. This scenario is professionally challenging because assessing non-economic damages, such as pain and suffering, involves a subjective element that must be balanced against objective legal and regulatory standards. The claims handler must navigate the inherent difficulty in quantifying intangible losses while adhering strictly to the principles of fairness, proportionality, and the specific guidelines of the strategic claims management exam's jurisdiction. The goal is to achieve a settlement that is both just for the claimant and compliant with the regulatory framework, avoiding both undercompensation and overcompensation. Correct approach involves a comprehensive assessment of the claimant's experience, supported by evidence, and evaluated against established legal precedents and guidelines for non-economic damages within the relevant jurisdiction. This approach prioritizes a thorough understanding of the impact of the injury on the claimant's life, considering factors such as the severity and duration of pain, emotional distress, loss of enjoyment of life, and any permanent impairment. The regulatory justification lies in adhering to the principles of indemnity and fairness, ensuring that the claimant is compensated for their actual losses, as interpreted and permitted by the governing laws and exam framework. This requires a nuanced judgment that avoids arbitrary decisions and is grounded in a reasoned application of principles. An incorrect approach that relies solely on a predetermined, fixed sum for specific injury types, without considering the individual circumstances of the claimant, fails to meet the requirement for individualized assessment. This approach is ethically problematic as it can lead to unfair outcomes, either by undercompensating claimants with more severe subjective experiences or overcompensating those with less impact. It also risks violating regulatory principles that demand a case-by-case evaluation. Another incorrect approach that focuses exclusively on minimizing the payout to the insurer, without adequate consideration of the claimant's actual suffering and loss, is a clear ethical and regulatory failure. This approach prioritizes the financial interests of one party over the just compensation of the injured party, contravening the fundamental principles of fair claims handling and potentially breaching statutory duties of care or good faith. A further incorrect approach that adopts an overly lenient stance, awarding excessive sums based on speculative or exaggerated claims without sufficient evidential support, also presents significant challenges. While aiming for claimant satisfaction, this approach can lead to unsustainable payouts, potentially contravening principles of proportionality and responsible resource management within the insurance framework. It may also be seen as failing to exercise due diligence in assessing the validity and extent of the claimed non-economic damages. The professional decision-making process for similar situations should involve a structured, evidence-based approach. This includes 1. Thoroughly gathering all relevant information about the claimant's injury, its impact, and the duration of suffering. 2. Consulting applicable legal precedents, judicial guidelines, and any specific assessment tools or frameworks provided by the regulatory body or exam syllabus. 3. Engaging in objective analysis, distinguishing between verifiable impacts and subjective experiences, and assessing the credibility of the claimant's account. 4. Applying a reasoned judgment, informed by the gathered evidence and legal standards, to arrive at a fair and justifiable assessment of non-economic damages. 5. Documenting the entire assessment process meticulously, including the rationale for the final determination. Question 11. Strategic planning requires a robust framework for managing claims liabilities. A claims manager is reviewing the current reserve adequacy for a portfolio of complex liability claims. Which of the following actions best demonstrates adherence to regulatory requirements for reserve management and proactive monitoring? Option A. Reducing reserves based on a general expectation of favorable litigation outcomes without specific supporting evidence for individual claims. Option B. Deferring any significant reserve adjustments until the annual financial reporting period to consolidate reporting efforts. Option C. Conducting a comprehensive review of each claim's current status, considering all new information, expert opinions, and potential settlement outcomes to adjust reserves as necessary. Option D. Relying on the average reserve amounts established for similar claims in previous years to determine current reserve adequacy. The correct answer is C. Conducting a comprehensive review of each claim's current status, considering all new information, expert opinions, and potential settlement outcomes to adjust reserves as necessary. Explanation. This scenario is professionally challenging because it requires a nuanced understanding of regulatory expectations regarding reserve adequacy and the proactive monitoring of claims to ensure those reserves remain appropriate. The core challenge lies in balancing the need for accurate financial reporting with the dynamic nature of claims, where new information can significantly alter the estimated cost of settlement. A claims manager must exercise sound judgment, drawing upon both experience and regulatory guidance to avoid under-reserving, which can lead to financial strain and regulatory scrutiny, or over-reserving, which can distort financial performance and potentially impact pricing. The correct approach involves a systematic and ongoing review of claims, considering all available information, including expert reports, legal developments, and settlement negotiations, to assess the adequacy of existing reserves. This proactive monitoring ensures that reserves are adjusted in a timely manner to reflect the most current and realistic estimate of ultimate loss. This aligns with regulatory principles that mandate accurate financial reporting and prudent management of liabilities. Specifically, under the framework of the Strategic Claims Management exam, which emphasizes adherence to regulatory guidelines, this approach directly addresses the requirement for maintaining reserves that are sufficient to cover all anticipated claims liabilities. It reflects a commitment to financial integrity and compliance with solvency requirements. An incorrect approach that relies solely on historical averages without considering individual claim developments fails to meet regulatory expectations for dynamic reserve management. This oversight can lead to reserves that are inadequate for current claims, potentially resulting in financial shortfalls and regulatory noncompliance. Another incorrect approach, which involves delaying reserve reviews until the end of a financial period, introduces significant risk. This delay means that emerging trends or changes in claim severity may not be identified and addressed promptly, leading to inaccurate financial statements and potential breaches of regulatory reporting standards. Furthermore, an approach that prioritizes minimizing reported reserves for short-term financial reporting purposes, without a robust basis for such reductions, constitutes a failure to adhere to the principle of prudence and can be seen as misleading financial practice, attracting regulatory censure. Professionals should employ a decision-making framework that prioritizes a thorough understanding of the specific regulatory environment governing reserve adequacy. This involves establishing clear internal policies and procedures for regular and ad hoc reserve reviews, incorporating a risk-based approach to identify claims requiring closer scrutiny. Continuous professional development in claims management and an awareness of evolving legal and industry best practices are also crucial. When faced with uncertainty, professionals should err on the side of prudence, ensuring that reserves are adequate, and document the rationale for all reserve adjustments meticulously. Question 12. Stakeholder feedback indicates a need to refine our approach to claims settlement, particularly concerning the types of financial redress offered to claimants. In a scenario involving a breach of contract by a service provider, where the claimant has suffered demonstrable financial losses due to the provider's failure to deliver services as agreed, but also expresses significant frustration and inconvenience. Which of the following approaches best aligns with the principles of strategic claims management under UK regulations and SISI guidelines? Option A. Propose a settlement that includes a substantial uplift on the quantifiable financial losses to account for the claimant's expressed frustration and inconvenience, without specific legal precedent for such an uplift. Option B. Advocate for the inclusion of punitive damages to punish the service provider for their poor performance and to deter future breaches, in addition to compensating for financial losses. Option C. Prioritize the claimant's subjective experience of distress and inconvenience, offering a settlement primarily based on their emotional impact, with less emphasis on the precise calculation of financial losses. Option D. Focus exclusively on quantifying and offering compensation for the direct financial losses incurred by the claimant, supported by evidence, and acknowledge the inconvenience without seeking to quantify it as a separate damage category beyond established general damages principles. The correct answer is D. Focus exclusively on quantifying and offering compensation for the direct financial losses incurred by the claimant, supported by evidence, and acknowledge the inconvenience without seeking to quantify it as a separate damage category beyond established general damages principles. Explanation. This scenario is professionally challenging because it requires a nuanced understanding of different types of damages and their application within the specific regulatory framework of the Strategic Claims Management exam, which we will assume for this exercise is based on UK regulations and SISI guidelines. The core difficulty lies in distinguishing between damages intended to compensate for actual loss and those with a punitive or deterrent purpose, and ensuring that the claims management strategy aligns with legal and ethical obligations. The correct approach involves accurately identifying and quantifying compensatory damages. This means focusing on losses that are directly attributable to the insured event and can be proven with evidence. Under UK law and SISI principles, The primary aim of damages in most civil claims is to put the claimant in the position they would have been in had the wrong not occurred. This principle underpins the assessment of compensatory damages, which can be further divided into special damages, quantifiable financial losses like medical expenses or lost earnings, and general damages, non-pecuniary losses like pain and suffering. A claims management strategy that prioritizes the accurate assessment and settlement of these demonstrable losses is ethically sound and legally compliant, as it adheres to the principle of indemnity and avoids over- or undercompensation. An incorrect approach would be to advocate for the inclusion of punitive damages in the claims settlement strategy without a clear legal basis. In the UK, punitive damages, also known as exemplary damages, are awarded only in very limited circumstances, such as where there has been oppressive, arbitrary, or unconstitutional conduct by the government, or where the defendant has acted in a way calculated to make a profit for themselves, which exceeds any compensation payable to the claimant. They are not a standard component of most insurance claims and are not intended to compensate the claimant for their loss. Pursuing punitive damages in a standard insurance claim would be a regulatory failure, as it deviates from the core purpose of insurance contracts and the principles of indemnity, potentially leading to an inflated claim and a breach of duty of care to the insurer or insured. Another incorrect approach would be to solely focus on the claimant's perceived emotional distress without a proper legal framework for general damages. While emotional distress can be a component of general damages, its assessment requires careful consideration of established legal principles and case law regarding the severity and impact of the distress. Strategy that inflates general damages based on subjective feelings without regard for legal precedent or evidential support would be ethically questionable and could lead to an unfair settlement, potentially breaching CISI guidelines on professional conduct and fair treatment of customers. The professional decision-making process for similar situations should involve a thorough review of the claim's particulars against the relevant legal and regulatory framework. This includes identifying the type of loss suffered, assessing its quantifiability, and determining the appropriate legal basis for any damages sought. Professionals must distinguish between compensatory and non-compensatory damages, understanding that the former is the primary objective in most claims. They should consult legal counsel when in doubt about the applicability of specific damage types, particularly those that are exceptional like punitive damages. Adherence to principles of fairness, transparency, and proportionality, as guided by CISI principles and UK law, is paramount in developing a strategic claims management approach. Question 13. Compliance review shows that the claims department is consistently exceeding its target for average claim settlement time, but a recent internal audit flagged a significant increase in potentially fraudulent claims that were settled without thorough investigation. Which of the following approaches best addresses this situation while adhering to regulatory expectations for fraud prevention and maintaining efficient claims processing? Option A. Focus solely on improving the speed of communication between departments involved in claim assessment, believing that faster information flow will inherently reduce opportunities for fraud. Option B. Implement enhanced data analytics and AI-powered tools to automatically flag suspicious claims based on predefined patterns and anomalies, alongside targeted training for claims handlers on recognizing emerging fraud indicators, ensuring that high-risk claims are escalated for specialist review before settlement. Option C. Increase the number of claims handlers to further expedite the settlement process, assuming that faster processing will deter potential fraudsters. Option D. Reduce the number of mandatory checks and documentation requirements for claims below a certain value to speed up processing, relying on random audits to catch fraud. The correct answer is B. Implement enhanced data analytics and AI-powered tools to automatically flag suspicious claims based on predefined patterns and anomalies, alongside targeted training for claims handlers on recognizing emerging fraud indicators, ensuring that high-risk claims are escalated for specialist review before settlement. Explanation. This scenario presents a professional challenge because the claims handler must balance the imperative to process claims efficiently with the equally critical duty to detect and prevent fraudulent activity. The pressure to optimize processes can inadvertently lead to overlooking subtle indicators of fraud, potentially resulting in financial losses for the insurer and a breach of regulatory obligations. Careful judgment is required to ensure that process improvements do not compromise the integrity of the claims handling function. The correct approach involves a proactive and systematic integration of fraud detection mechanisms within the claims management workflow. This means not merely reacting to suspicious claims, but embedding checks and balances that flag potential fraud early in the process. This aligns with regulatory expectations, such as those found in the UK's Financial Conduct Authority (FCA) handbook, which emphasizes the need for firms to have adequate systems and controls in place to prevent financial crime, including fraud. Ethically, it upholds the principle of acting with integrity and due skill, care, and diligence by protecting the insurer's assets, and by extension, its policyholders from the costs associated with fraud. An incorrect approach that focuses solely on speed of settlement, without adequate scrutiny, fails to meet regulatory requirements for robust fraud prevention. This could be seen as a breach of principles such as treating customers fairly, as it may lead to paying out fraudulent claims, which ultimately impacts honest policyholders through increased premiums. It also neglects the insurer's responsibility to maintain financial soundness. Another incorrect approach that relies on anecdotal evidence or personal suspicion without a structured investigative framework is also professionally unacceptable. This lacks objectivity and can lead to unfair accusations or missed opportunities to identify genuine fraud. Regulatory frameworks typically require evidence-based decision-making and adherence to established procedures for investigating suspected fraud. A further incorrect approach that delegates all fraud detection to a specialized unit without providing frontline staff with the necessary training and tools to identify initial red flags is also flawed. This creates a gap in the process, as many indicators of fraud are present at the initial stages of a claim. Effective fraud management requires a layered approach where all personnel are equipped to contribute to detection. A professional decision-making process for similar situations should involve a thorough understanding of the regulatory landscape governing fraud prevention and claims management. Professionals should prioritize the development and implementation of comprehensive fraud detection strategies that are integrated into daily operations. This includes investing in training, utilizing data analytics, and establishing clear escalation procedures for suspicious claims. When faced with process optimization initiatives, it is crucial to assess their potential impact on fraud detection capabilities and ensure that efficiency gains do not come at the expense of integrity and compliance. Question 14. Risk assessment procedures indicate a policyholder attempting a DIY repair on a leaking pipe inadvertently caused further significant water damage to their property. The policyholder states they did not intend to cause further damage, but their actions directly led to it. The claims handler must determine if this constitutes accidental damage under the policy, which approach best aligns with the regulatory framework for strategic claims management in the UK. Option A. Interpret accidental damage by considering whether the resulting water damage was unforeseen and unintended by the policyholder, even though the initial action of attempting a repair was deliberate, and assess against relevant policy exclusions. Option B. Deny the claim outright because the policyholder's initial action of attempting a repair was intentional, regardless of their intent regarding the resulting damage. Option C. Accept the claim automatically as the policyholder claims they did not intend to cause damage, without a detailed review of the policy's definition of accidental damage. Option D. Base the decision on how similar claims have been handled by other insurers in the market, without a specific review of the policy wording or regulatory guidance. The correct answer is A. Interpret accidental damage by considering whether the resulting water damage was unforeseen and unintended by the policyholder, even though the initial action of attempting a repair was deliberate, and assess against relevant policy exclusions. Explanation. Scenario analysis. This scenario is professionally challenging because it requires the claims handler to navigate the inherent ambiguity in insurance policy wording. The core difficulty lies in interpreting the scope of accidental damage, when the damage is a consequence of a deliberate, albeit misguided, action. Balancing the insurer's obligation to indemnify against the policyholder's reasonable expectations, while adhering strictly to the policy's terms and relevant regulatory guidance, demands careful judgment and a robust understanding of insurance law principles. Misinterpretation can lead to either an unwarranted denial of a valid claim or an overpayment on a claim that falls outside the policy's coverage, both of which have significant financial and reputational consequences. Correct approach analysis. The correct approach involves a meticulous examination of the policy wording, specifically the definition of accidental damage, and any exclusions that might apply. This requires considering the context of the damage, the policyholder's intent, and the foreseeability of the outcome. The regulatory framework for this exam, which aligns with UK insurance law and CISI guidelines, emphasizes the importance of interpreting policy terms in a way that is fair to the policyholder, while also respecting the contractual agreement. This means looking beyond the immediate cause to understand if the damage was truly accidental, in the sense of being unforeseen and unintended by the policyholder, even if the initial action was intentional. The Financial Conduct Authority, FCA principles, particularly those relating to treating customers fairly, are paramount. This approach prioritizes a balanced interpretation that upholds the spirit and letter of the policy within the regulatory landscape. Incorrect approaches analysis, an approach that immediately denies the claim based solely on the policyholder's intentional act of attempting a repair, without further investigation into the nature of the damage and the policyholder's intent regarding the outcome, fails to adhere to the principle of fair treatment. This is because it overlooks the possibility that the resulting damage, while stemming from an intentional act, was itself unforeseen and unintended. Such a denial could be deemed unfair under FCA regulations if the policyholder reasonably believed the damage would be covered, an approach that automatically accepts the claim because the policyholder did not intend to cause damage, without a thorough review of the policy's definition of accidental damage and any relevant exclusions, is also problematic. This approach risks misinterpreting the policy and potentially covering damage that was a foreseeable consequence of the policyholder's actions, even if the ultimate damage was not the primary objective. This could lead to an unsustainable claims cost for the insurer and a breach of the contractual terms. An approach that relies on anecdotal evidence or industry hearsay regarding similar claims, rather than a direct interpretation of the specific policy wording and applicable regulations, is professionally unsound. This bypasses the fundamental requirement to base claims decisions on the contractual agreement and regulatory obligations, potentially leading to inconsistent and unfair outcomes. Professional reasoning. Professionals should adopt a systematic approach. First, thoroughly review the policy wording, paying close attention to definitions and exclusions. Second, gather all relevant facts about the incident, including the policyholder's actions, intent, and the nature of the damage. Third, apply established principles of insurance policy interpretation, considering case law and regulatory guidance, such as FCA principles on treating customers fairly. Fourth, document the decision-making process clearly, justifying the interpretation based on the policy and regulations. This structured approach ensures fairness, compliance, and defensibility of the claims decision. Question 15. The monitoring system demonstrates a significant increase in the number of high-value property damage claims being reported, with a particular surge in claims related to complex structural issues following a recent weather event. A claims handler is tasked with valuing one such claim, which involves extensive damage to a large residential property. The insured is eager for a rapid settlement to commence repairs. The handler has received an initial, high-level estimate from the insured's preferred contractor, but it lacks detailed breakdowns and specific material costs. Which approach to property damage valuation is most aligned with regulatory expectations for strategic claims management in this scenario? Option A. Proceed with a settlement based on the insured's initial estimate, prioritizing speed to meet the insured's immediate needs and minimize ongoing claims handling costs. Option B. Commission an independent, detailed survey and valuation report from a qualified loss adjuster, incorporating all relevant policy terms and market standard repair costs, before agreeing to a settlement figure. Option C. Apply a standard percentage deduction to the initial estimate to account for potential overestimation by the contractor and to ensure a conservative payout. Option D. Negotiate a settlement based on the insured's estimate, with a commitment to revisit the figure if further, more detailed contractor quotes emerge later in the repair process. The correct answer is A. Proceed with a settlement based on the insured's initial estimate, prioritizing speed to meet the insured's immediate needs and minimize ongoing claims handling costs. Explanation. Scenario analysis. This scenario is professionally challenging because it requires the claims handler to balance the insured's desire for a swift settlement with the insurer's obligation to pay a fair and accurate indemnity. The pressure to settle quickly, especially in a high-value property damage claim, can lead to overlooking critical valuation details. The claims handler must exercise sound judgment to ensure the valuation reflects the true cost of repair or replacement, adhering to policy terms and regulatory expectations for fair claims handling. Correct approach analysis. The correct approach involves a thorough and documented assessment of the damage, considering all relevant factors for a precise valuation. This includes obtaining detailed quotes from reputable contractors, verifying the scope of works, and accounting for any policy excesses or betterment clauses. This aligns with the regulatory framework's emphasis on fair and transparent claims handling, ensuring the insured receives the indemnity they are entitled to under the policy without undue delay or underpayment. It upholds the principles of good faith and fair dealing expected of insurers. Incorrect approaches analysis. An approach that relies solely on a preliminary estimate without further verification is incorrect because it risks undervaluing the claim. This fails to meet the regulatory requirement for a diligent and accurate assessment of loss, potentially leading to an unfair outcome for the insured and a breach of the duty of good faith. An approach that prioritizes immediate settlement based on the insured's initial estimate, without independent verification or consideration of policy terms, is also incorrect. This demonstrates a lack of due diligence and can result in an underpayment, violating regulatory principles of fair claims handling and potentially exposing the insurer to reputational damage and regulatory scrutiny. An approach that focuses on minimizing the payout by applying arbitrary deductions not supported by policy terms or evidence is fundamentally flawed. This constitutes unfair claims handling, breaches the duty of good faith, and is contrary to regulatory expectations for a fair and equitable settlement. Professional reasoning. Professionals should employ a structured decision-making framework that begins with a comprehensive understanding of the policy terms and conditions. This should be followed by a detailed investigation and assessment of the damage, gathering all necessary evidence and expert opinions. The valuation should then be derived from this evidence, ensuring it is fair, accurate, and compliant with all regulatory requirements. Regular communication with the insured throughout the process is also crucial to manage expectations and maintain transparency. Question 16. Operational review demonstrates that the claims department is considering the widespread adoption of a new mobile application for policyholders to submit and track their claims. This application will allow for the uploading of documents, photos, and videos, and will provide real-time updates on claim status. The IT security team has raised concerns about potential data vulnerabilities and the need for stringent data protection measures. The head of claims is eager to leverage this technology to improve customer satisfaction and operational efficiency. Which of the following strategic approaches best balances the benefits of mobile technology with regulatory and ethical obligations in claims management? Option A. Conduct a thorough risk assessment of the mobile application. Develop and implement comprehensive data security protocols, including encryption and access controls. Provide mandatory user training on data handling, and establish a clear communication strategy with policyholders regarding data privacy. Option B. Utilize the mobile application for non-sensitive claim information only, and require policyholders to submit all supporting documentation through traditional mail or email channels. Option C. Delay the implementation of the mobile application indefinitely until absolute zero-risk security can be guaranteed, thereby avoiding any potential data breaches. Option D. Implement the mobile application immediately with basic password protection, focusing on user adoption and addressing security concerns reactively as they arise. Correct answer is D. Implement the mobile application immediately with basic password protection, focusing on user adoption and addressing security concerns reactively as they arise. Explanation. Scenario analysis. This scenario presents a professional challenge due to the rapid evolution of mobile technology and its integration into claims management processes. Insurers must balance the efficiency gains offered by these technologies with the imperative to maintain data security, customer privacy, and regulatory compliance. The use of mobile applications for claims submission and processing introduces new vectors for data breaches and potential misinterpretations of information, requiring a robust strategic approach to mitigate risks. Careful judgment is essential to ensure that technological adoption enhances, rather than compromises, the integrity and fairness of the claims handling process. Correct approach analysis. The correct approach involves a comprehensive risk assessment and the implementation of robust data security protocols, including encryption, multi-factor authentication, and regular security audits, specifically tailored to the mobile technology being deployed. This aligns with the principles of data protection and customer confidentiality mandated by relevant financial services regulations, which require firms to take appropriate technical and organizational measures to safeguard personal data. Furthermore, it supports the ethical obligation to handle customer information responsibly and maintain trust. The focus on user training and clear communication regarding data handling practices reinforces compliance and ethical conduct. Incorrect approaches analysis. An approach that prioritizes rapid deployment of mobile technology without adequate security measures risks significant data breaches, leading to regulatory penalties and reputational damage. This fails to meet the appropriate technical and organizational measures requirement of data protection laws. An approach that restricts mobile technology use solely due to perceived security risks, without exploring mitigation strategies, represents a failure to innovate and potentially offer a more efficient and customer-friendly claims process. This could be seen as a failure to act in the best interests of customers and the business, and may not align with regulatory expectations for firms to adopt appropriate technologies. An approach that relies on generic security protocols without specific consideration for the unique vulnerabilities of mobile applications and the sensitive nature of claims data is insufficient. This demonstrates a lack of due diligence and a failure to implement measures proportionate to the risks involved, potentially violating regulatory requirements for risk management. Professional reasoning. Professionals should adopt a proactive and risk-based approach. This involves understanding the specific mobile technologies being considered, identifying potential threats and vulnerabilities, and implementing proportionate controls. Continuous monitoring, regular training, and staying abreast of evolving regulatory guidance are crucial. Decision-making should be guided by a commitment to data security, customer privacy, regulatory compliance, and the ethical handling of sensitive information, ensuring that technological advancements serve to improve, not undermine, the claims management function. Question 17. Market research demonstrates that policyholders often prioritize the speed of property restoration following a claim. In a scenario involving significant structural damage to a commercial property due to a burst water main, what approach best balances the policyholder's need for rapid resumption of business operations with the insurer's obligation to ensure accurate damage assessment and compliant, effective repairs? Option A. Appoint a qualified loss adjuster and, if necessary, specialist structural engineers to conduct a thorough assessment of all damage, including potential secondary effects, before authorizing any repair work. Option B. Authorize the policyholder to select their own contractor and approve all invoices directly, with the insurer conducting a post-repair audit to ensure compliance. Option C. Engage a reputable building contractor immediately to commence emergency repairs based on a preliminary visual inspection, with a detailed assessment to follow once operations have resumed. Option D. Prioritize the lowest cost repair options identified by a general contractor to minimize the claim payout, even if it means using alternative materials or methods. Correct answer is C. Engage a reputable building contractor immediately to commence emergency repairs based on a preliminary visual inspection, with a detailed assessment to follow once operations have resumed. Explanation. This scenario is professionally challenging because it requires balancing the insurer's obligation to indemnify the policyholder with the need to manage claims costs effectively, all while adhering to strict regulatory requirements for property damage assessment and repair. The pressure to expedite repairs to minimize business interruption for the policyholder can conflict with the thoroughness required for accurate assessment and the selection of appropriate repair methods, especially when dealing with complex or latent damage. A claims handler must exercise sound judgment, relying on expertise and established procedures to ensure fair and compliant outcomes. The correct approach involves a comprehensive, evidence-based assessment of the property damage, followed by the development of a repair plan that is both technically sound and compliant with policy terms and relevant regulations. This includes engaging qualified loss adjusters and, where necessary, specialist surveyors to accurately determine the extent and cause of damage. The repair strategy must prioritize restoring the property to its pre-loss condition, using materials and methods that meet current building standards and regulatory requirements, without introducing betterment. This aligns with the fundamental principle of indemnity and the insurer's duty of care to act with reasonable skill and care, as expected under general insurance law and specific claims handling guidelines. An incorrect approach that focuses solely on the speed of repair without adequate assessment risks underinsuring the damage, leading to policyholder dissatisfaction and potential regulatory scrutiny for failing to meet indemnity obligations. This could also result in inadequate repairs that fail to meet building codes or standards, creating future risks and liabilities. Another incorrect approach that prioritizes cost saving above all else, potentially by specifying lower quality materials or less robust repair methods, directly contravenes the principle of indemnity. This can lead to a repair that does not fully restore the property to its pre-loss state, exposing the insurer to claims of unfair dealing and breach of contract. Such an approach also risks noncompliance with building regulations, which could have legal and safety implications. A further incorrect approach that relies on unqualified personnel to assess and manage repairs introduces significant risks. Without the necessary expertise, the assessment may be flawed, leading to incorrect repair specifications, potential for further damage, and non-compliance with industry standards and regulations. This demonstrates a failure to exercise reasonable skill and care in managing the claims process. Professionals should adopt a decision-making process that begins with a thorough understanding of the policy wording and the applicable regulatory framework. This involves gathering all relevant evidence, engaging appropriate expertise for assessment, developing a repair plan that is technically sound and compliant, and communicating transparently with the policyholder throughout the process. Regular review and oversight of the repair process are crucial to ensure adherence to the agreed plan and regulatory standards. Question 18. System analysis indicates that a claims handler has identified several inconsistencies in a policyholder's claim submission that, upon initial review, raise significant concerns about potential fraudulent misrepresentation. The policyholder has provided documentation that appears to be altered, and their account of events has changed multiple times during conversations. The claims handler is aware of the company's internal fraud detection protocols and the regulatory requirements for reporting suspected fraudulent activity. Which of the following actions represents the most appropriate and compliant response for the claims handler? Option A. Directly contact the policyholder to confront them with the suspected inconsistencies and demand an explanation, threatening to report them if their explanation is unsatisfactory. Option B. Report the suspicions directly to the relevant regulatory authority and law enforcement agencies without consulting internal departments or conducting further investigation. Option C. Disregard the inconsistencies as minor discrepancies and proceed with processing the claim to avoid potential disputes and maintain positive client relations. Option D. Immediately escalate the concerns to the company's internal fraud investigation unit and await their assessment before taking further action or reporting externally. Correct answer is D. Immediately escalate the concerns to the company's internal fraud investigation unit and await their assessment before taking further action or reporting externally. Explanation. This scenario presents a professional challenge due to the inherent conflict between the duty to protect client confidentiality and the legal and ethical obligation to report suspected fraudulent activity. The claims handler must navigate this delicate balance, ensuring that any action taken is compliant with the relevant regulatory framework and ethical guidelines, without prejudicing the client unnecessarily or failing in their duty to uphold the integrity of the insurance system. Careful judgment is required to distinguish between genuine suspicion and unfounded accusations. The correct approach involves a thorough internal investigation and consultation with the appropriate internal compliance or legal departments before making any external report. This allows for a structured and documented assessment of the evidence, ensuring that the report is based on reasonable grounds and adheres to the specific reporting thresholds and procedures mandated by the regulatory body. This approach upholds the principle of proportionality, minimizing potential harm to the client while fulfilling the obligation to report suspected fraud. It aligns with the regulatory framework's emphasis on robust internal controls and due diligence in fraud detection and reporting. An incorrect approach of immediately reporting suspicions to external authorities without internal verification risks violating client confidentiality and could lead to unjustified reputational damage for the client if the suspicions are unfounded. This bypasses established internal procedures designed to ensure accuracy and fairness, potentially contravening guidelines on data protection and the duty of care owed to policyholders. Another incorrect approach of ignoring the suspicions due to a desire to avoid conflict or workload is a direct failure to comply with regulatory obligations. Insurance regulations typically mandate the reporting of suspected fraud to prevent financial losses to the insurer and the wider market. Failure to report can result in regulatory sanctions and undermine the integrity of the insurance sector. A further incorrect approach of confronting the client directly with accusations of fraud without prior internal investigation or legal consultation is also professionally unsound. This can escalate the situation unnecessarily, compromise any subsequent formal investigation, and potentially expose the claims handler and the company to legal challenges. It fails to follow a structured, evidence-based process and disregards the importance of due process. The professional decision-making process for similar situations should involve a systematic evaluation of the evidence, a clear understanding of the company's internal fraud reporting policies, and a consultation with legal or compliance experts. Professionals should always prioritize adherence to the regulatory framework, maintaining client confidentiality where appropriate, and acting with integrity and due diligence. When fraud is suspected, the process should be to gather information, assess its credibility, consult internally, and then, if warranted, follow the prescribed reporting channels. Question 19. The risk matrix shows a significant increase in the potential for both fraudulent claims and customer dissatisfaction due to the current claims processing backlog. The insurer is considering several strategic responses to address these emerging risks and improve overall claims management efficiency. Which of the following strategic responses best aligns with the principles of effective claims management within a regulated environment, aiming to mitigate both financial and reputational risks? Option A. Focus solely on increasing the volume of claims processed by hiring additional temporary staff with minimal oversight to clear the backlog as quickly as possible, assuming that efficiency gains will naturally reduce fraud and dissatisfaction. Option B. Implement a phased rollout of advanced AI-powered claims assessment tools, coupled with enhanced training for claims handlers on identifying complex fraud indicators and ensuring fair customer communication protocols, while prioritizing the backlog reduction for older claims first. Option C. Invest in a new customer relationship management (CRM) system to improve customer communication, while deferring any significant changes to the core claims processing technology or fraud detection mechanisms until the backlog is cleared. Option D. Immediately halt all non-essential claims processing and initiate a comprehensive review of every open claim, regardless of its age or complexity, to identify any potential overpayments or inefficiencies, thereby reducing immediate payout liabilities. The correct answer is B. Implement a phased rollout of advanced AI-powered claims assessment tools, coupled with enhanced training for claims handlers on identifying complex fraud indicators and ensuring fair customer communication protocols, while prioritizing the backlog reduction for older claims first. Explanation. This scenario presents a professional challenge because it requires balancing the immediate financial pressures of a large insurer with the long-term strategic imperative of maintaining customer trust and regulatory compliance. The temptation to aggressively manage claims to reduce payouts can conflict with the duty to handle claims fairly and efficiently, as mandated by regulatory bodies. Effective claims management is not merely about cost containment. It is a cornerstone of an insurer's reputation and its ability to operate within the regulated financial services sector. The strategic importance lies in how claims are handled, as this directly impacts customer retention, market perception, and the insurer's ability to meet its contractual obligations while adhering to stringent legal and ethical standards. The correct approach involves a proactive and data-driven strategy that leverages technology and skilled personnel to streamline the claims process, ensuring fair settlements while identifying and mitigating fraudulent claims. This approach aligns with the principles of good governance and customer centricity, which are implicitly and explicitly supported by regulatory frameworks designed to protect policyholders and ensure market integrity. Specifically, it reflects a commitment to the spirit and letter of regulations that require insurers to act with due skill, care, and diligence, and to treat customers fairly. By focusing on early detection of fraud and efficient processing of legitimate claims, the insurer can achieve cost savings without compromising its obligations. An approach that prioritizes immediate cost reduction through delayed processing or overly stringent scrutiny of all claims, regardless of their merit, would be professionally unacceptable. This would likely lead to breaches of regulatory requirements concerning timely claims handling and fair treatment of customers. Such a strategy risks alienating policyholders, potentially leading to increased complaints, regulatory investigations, and reputational damage. Furthermore, an overemphasis on cost reduction at the expense of thorough investigation could inadvertently allow fraudulent claims to slip through, creating a different set of financial and reputational risks. Another incorrect approach would be to invest heavily in new claims management technology without adequate consideration for the human element and the specific regulatory requirements of the jurisdiction. While technology can enhance efficiency, its implementation must be guided by an understanding of how it will impact the claims handling process in relation to legal and ethical obligations. A purely technology-driven solution, without a corresponding focus on staff training and process adaptation to meet regulatory standards, could lead to errors, inconsistencies, and a failure to meet the nuanced requirements of claims adjudication. The professional decision-making process for similar situations should involve a comprehensive assessment of the insurer's current claims management capabilities against regulatory expectations and strategic objectives. This includes evaluating the potential impact of any proposed changes on customer satisfaction, operational efficiency, financial performance, and regulatory compliance. A balanced strategy that integrates technological advancements with skilled human oversight, underpinned by a strong ethical framework and a thorough understanding of the relevant regulatory landscape, is essential for sustainable success in strategic claims management. Question 20. What factors determine the ethical and regulatory appropriateness of a customer satisfaction measurement methodology employed by an insurer in the strategic management of claims, considering the potential for bias and the need for genuine customer feedback? Option A. The correlation between survey results and the final settlement amount of the claim, and the speed at which claims are closed. Option B. The objectivity of the survey design, the timing of feedback solicitation throughout the claims process, and the neutrality of the language used to elicit responses. Option C. The use of leading questions designed to confirm positive perceptions, and the exclusion of feedback from customers who have lodged formal complaints. Option D. The proportion of customers who respond to post-settlement surveys, and the insurer's internal cost-saving targets for claims handling. The correct answer is B. The objectivity of the survey design, the timing of feedback solicitation throughout the claims process, and the neutrality of the language used to elicit responses. Explanation. This scenario presents a professional challenge because it requires balancing the insurer's need for efficient claims processing and cost management with the customer's fundamental right to fair and transparent treatment, particularly when their satisfaction is being measured. The ethical dilemma arises from the potential for the measurement methodology itself to influence or even distort the customer's perception of their experience, thereby compromising the integrity of the feedback. Careful judgment is required to ensure that the measurement process is not only effective in gathering data, but also ethically sound and compliant with regulatory expectations for customer care. The correct approach involves designing and implementing a customer satisfaction measurement system that is objective, unbiased, and focuses on the customer's actual experience throughout the claims journey. This includes ensuring that feedback is solicited at appropriate junctures, using neutral language in surveys, and providing clear explanations of how the feedback will be used. This approach is ethically justified as it upholds the principles of transparency and fairness, ensuring that customer feedback is a genuine reflection of their experience, which is a key expectation under regulatory frameworks governing fair treatment of customers. It aligns with the spirit of regulations that mandate insurers to act in the best interests of their customers and to maintain robust complaint handling and feedback mechanisms. An incorrect approach that relies solely on post-settlement surveys that are heavily weighted towards the financial outcome of the claim, without considering the overall service experience, is ethically flawed. This method risks incentivizing adjusters to prioritize settlement speed and amount over thorough investigation and empathetic communication, potentially leading to customer dissatisfaction, even with a favorable financial outcome, if the process was perceived as adversarial or dismissive. This fails to meet regulatory expectations for a holistic customer experience and can be seen as a form of misrepresentation of the insurer's commitment to customer satisfaction. Another incorrect approach that involves surveying customers only after a complaint has been lodged and framing questions in a way that assumes the complaint is the primary driver of dissatisfaction is also ethically problematic. This approach can skew results by focusing only on negative experiences and may not capture the broader spectrum of customer interactions. It fails to provide a comprehensive view of overall satisfaction and can lead to a reactive rather than proactive approach to service improvement, potentially violating regulatory principles of continuous improvement in customer service. A third incorrect approach that uses leading questions in satisfaction surveys, designed to elicit positive responses regardless of the actual experience, is a clear ethical failure. This manipulates the data and misrepresents customer sentiment, undermining the purpose of feedback collection. Such practices are contrary to regulatory requirements for accurate reporting and fair dealing with customers, as they create a false impression of customer contentment. The professional decision-making process for similar situations should involve a thorough understanding of the relevant regulatory framework's expectations regarding customer treatment and feedback. Professionals should prioritize methodologies that are designed to capture genuine customer sentiment, are transparent in their execution, and are free from bias. This involves considering the entire customer journey, not just the financial outcome, and ensuring that feedback mechanisms are designed to inform continuous improvement in service delivery, thereby upholding both ethical obligations and regulatory compliance.